addressing an issue that impacts many Australians, buying real estate interstate at a time when markets are manic in many places. Buying property in other states presents particular problems for real estate consumers who generally feel a lot more comfortable buying in their own backyard. Buying interstate can be challenging as it presents the problems of how to research an unfamiliar market and how to check everything from a distance. Those problems are multiplied when the market is as hot as it is at the moment. Properties are selling fast, often for higher than expected prices. And that's where a good buyer's agent comes in. Now more than ever, investors need a trusted advocate on their team. And today my special guest is National Buyer's Agent Alex Dutt from Adviseable, who has lots of experience in helping investors buy property in distant markets, including in the current boom markets that exist in many parts of the country. So Alec, welcome.
Thanks, Terry. Welcome everyone. Thanks for tuning in. Today I'm going to be talking about buying interstate. Obviously, we've been buying for many years interstate, and given the current state of play, as Terry's touched on within the marketplace, it can be more challenging than ever. So I'm going to talk through some examples and practical tips that you can use when investing interstate.
So Alex, you and Kate and your colleagues at Adviseable have been buying in all over the country for quite some time. You're based in Sydney, but you operate nationally.
Yes, that's correct. Yeah, and it has been, look, I've been doing this for 15 years now, and to be frank, I've never seen anything like it over the last 18 months. Obviously, no one's seen a pandemic and so on, so the conditions are new for everyone, don't get me wrong, but in saying that, given the way the market's performed and just the ferocity and intensity of some of the buying conditions, is just, I've never seen it. So if you're an interstate investor, like I said, it's very challenging, but I'm hoping to help you guys, give some tips to navigate, those waters.
Okay. Well, you've got some slides to present to us and talk through, so why don't you share your screen and we'll rip into it. And just remind everybody watching and listening today that we will allow time at the latter part of the hour to field your questions. So if you do have questions or comments, please type them into the chat box or the Q&A panel you should see in front of you.
Yeah, thanks, Terry. And like Terry said, it is a Q&A, so I'm going to be try and not consume the entire time with my presentation. So, and if anyone's got any questions along the way, please jump in. So what I'm going to be covering off today on is a bit of perspective on what we do at Adviseable. So a bit more info, so you can get a bit of perspective as to why you might choose to listen to myself and the experience that we have. Some client purchase case studies. So a bit of an example of some of the purchases that we've done recently and how they've performed. So I wanted to do this not just to showcase, I guess, the great results that we've had for clients, we've achieved for clients, but also just to provide a bit of context as to what's happening in the marketplace with prices. Go through some really important questions to ask when investing interstate in 2022. And look, to be frank, some questions that are really important to ask, even if you're buying, outside your own backyard as well. So maybe, you're located in Sydney and you want to buy in Newcastle, for example, some of the questions to ask if you're doing an investment like that. How to get yourself in front of the buyer queue without overpaying, which is all too common at the moment. I get asked a lot, as a buyer's agent, what can you do for me? Which is a fair question, and one of the things that we can do is obviously get you a great buy, but also, making sure you don't overpay. And I think that's a mistake that a lot of people are paying when everything's moving and, it's a rampant market and people are getting FOMO. Overpaying is all too prevalent, and I think that's one of the dangers at the moment. We're going to do a bit of a location spotlight because inevitably people are going to ask, what are some of the areas that we're buying and we like the look of. So I'm going to go through one of those. And again, questions. So jump in anytime, ask a question. We'll leave some time at the end, hopefully, for some questions. So before we get into it, a bit of a disclaimer, that is that just to note that the information that I share is just general in nature. It's not personal financial advice. To see whether these investment areas and concepts and strategies that we talk about are right for you, you really need to consult with your financial professional of choice. So who are we? So I won't go in too much detail about this. It's not all about us, but we are fully licensed independent buyers agents. So, and we're also qualified property investment advisors. As I mentioned, been doing this for 15 years. We offer a fee-for-service business model. So basically, an investor pays us, we get paid by an investor alone, and we go out and buy properties for our investor clients. So we're not paid any commissions by any third-party vendors, builders, developers. There's no conflict of interest, very transparent business model. And most importantly, we offer a tailored property investment strategy. So every individual investor is unique, and we offer a strategy that suits them. So whatever that may look like and wherever that may look like. And we have a national reach. So we're buying all around Australia, primarily over the last 18 months in New South Wales, Queensland, Victoria, South Australia, and WA. And we just deal in residential property as well. That's worth noting. So part of our job is that we conduct the property search on behalf of investors, and we work closely with selling agents. So there's no payment from selling agents, of course, just to stress that point. But obviously selling agents have access to the listings. So they're the ones that provide, the means for us to get access to those properties. And most importantly, we carry out the property inspection and due diligence process on behalf of the investor, and also assessing market value. So that's really important. That comes back into what I was saying before about the importance of, making sure that investors get, value for money and buy at the right price. And we negotiate. So expert negotiators, again, as buyers agents, we buy a lot of property. So we facilitate that, and we attend auctions on the buyer's behalf. And we basically, the team project manages the purchase process. So we take it from go to woe, working with all the third-party professionals, conveyancer, building and pest inspector, property manager, quantity surveyor, etc. So that's who we are, and a bit of a rundown of what we offer clients and what we're doing, day to day on behalf of clients. So a bit of a purchase case study, and again, I just wanted to take people through this as an example of what we've seen in the marketplace, not just to show how great we are, but more about, okay, what's actually happened. So what are, beyond the hypothetical numbers or the numbers on the page that people are seeing, okay, X areas increased in value by 26%. What does it actually mean? What does that look like dollar for dollar in terms of real case studies? And I've chosen not just to show you, okay, here's a property and this is what I think it's worth now. I've shown, okay, here's a property and here's a comparable property on the same street. In some cases next door, in some cases around the corner, but I've got 3 examples that are based on purchases that we've done, the investors held on to them, and then comparable purchases, and that provides some real context as to real examples. So here's an example in Moreton Bay, so 35 kilometres north of Brisbane CBD. So we bought this one for an investor client in June of last year. So I bought this one off market. We paid $448,000 for it. It needed a little bit of paint and carpets. There was a bit of work to do, nothing crazy. You think about, $12,000, $13,000 worth of work to it. But we bought that one. We saw the opportunity, great location, a lot of potential. Interestingly enough, just as a side note, I was talking to a friend in Brisbane and really turned his nose up at, Narangba. So this is a good indication of, people that live in an area, may have their own hang-ups about particular suburbs and locations that, are separate to, the investment dynamics and the money-making potential of an area. So we bought that one for 48 June. And then basically you can see what's happened earlier this year. A house very, very close by, very comparable, same street. Just a few houses away. sold for 614,000. So, that is basically a 7-month turnaround. And that, the statistics of seeing that on paper, particular price growth, this is represented by, getting it right, getting the right property type, right location, and having a property that, ticks all the boxes, that most importantly owner occupiers want. This is an owner occupier quality property, and that is quite subjective, owner occupier, right? But in line with this area, this is first home buyer type of property. And you've seen that significant growth that's been achieved by this property. We also already have a chat and Q&A. Terry, should we take that quickly?
If there's something you want to refer to, Alex, by all means.
Yeah. We've been asked about fees, so feel free to email me at the end and I'm happy to tell you about our fees. I can talk through that. So another one that we bought for an owner-occupier client. So we actually bought a block of land. I'm helping them with a build. This is in Penrith, so 39 kilometres west of Sydney CBD. And I have, obviously blocked out the addresses for privacy reasons, but I can assure you they're legitimate suburbs and their comparables are very close by. But this one we bought this one late 2020 and price paid 770. So 1,057 square metre block of land, which is a nice big block. It is a new estate, but very much it's an owner-occupier, like 100% owner-occupier estate. And just in October last year, literally a few houses up, slightly smaller, so from 1,057 down to 1,004, sold for 1.25. So that's, almost $500,000 price increase within 10 months. So this is the kind of, market that you're buying. And these are the examples, this is legitimate examples of what we've seen happen, in the last 18 months. So lastly, another one, Sunshine Coast. So this one was bought about 18 months ago. So, a market you're very familiar with, Terry, I'm sure. Yeah. Any comments about the Sunshine Coast, Terry?
Well, it's been one of the national leaders on price growth for the last 3 years at least. It's a great example of a location that can be transformed in terms of its appeal to buyers of all sorts through major infrastructure spending. So it's been transformed and grown much stronger and more diverse as an economy. It's created a lot of new jobs, including the new medical precinct. And that's put upward pressure on prices because there's a lot of new demand coming to the Sunshine Coast market. And we've seen it emerge over the past, say, 3 years as a national leader on price growth from all parts of the market, not just Noosa and Sunshine Beach, those upmarket suburbs, but right across the different market sectors to the more affordable areas. So, yeah, it's been very much a growth market.
Absolutely. It's an amazing spot. So I know, as I was telling you off air, I was there a couple of weeks ago, didn't get as much sunshine, but it's still a great location. And it was good to see. We've been buying there for a long time, so it was good to visit and see, the area, how it's just grown, significantly since my last visit. So here's a comparable. So we bought this one, 593 Parisian Springs. So just close by to Maroochydore. Bought it off market. So we bought this one directly from a vendor, actually. So that was an interesting one. It's pretty unusual, to be frank, but I bought that one directly from a vendor contact that wanted out. Bought it for 593, which is a good deal at the time because there's no agent involved. So there's a bit of money saving there. And yeah, there was a 5-bedder. So, big configuration, again, owner-occupier type of home, definitely an owner-occupier type of pocket. And, here's a comparable that sold. I couldn't find one that sold on the same street like the others, but this gives you an idea of what's selling. So this was a 4-bed, a few streets away, sold in December for $950. So that's the kind of growth that Terry was talking about. So this is the, like actual live examples, genuine examples, not just numbers on a page to say, this is what something's done in theory. This is what we paid for it, and this is the sale price of comparables. So you can see that, we've had significant growth. And I guess the next question from that's going to be, as an investor, you're thinking, okay, so that's great. I've missed out on, 18 months worth of phenomenal growth. Where does that leave me for buying, in the next few months or years? We'll touch on that. And I should go back. Sorry, Terry, I didn't get an opportunity. Did you have anything to add about Moreton Bay, just while we look at that example?
Yeah, Moreton Bay has been consistently one of the top areas for home buyers and investors over the last couple of years. It always stands out. We do our quarterly research on sales activity and also monitoring what's happening with prices. And there's always a lot of growth markets in the Moreton Bay region, which is the outer ring northern suburbs of Brisbane. It's quite a big local government area. A lot of suburbs, including Bayside suburbs, the Redcliffe Peninsula is part of that region. But economically, it's got a lot of diversity, creates a lot of jobs. It's a growth economy, and out of that comes a strong property market. And it's attracts a lot of buyers because it's relative affordability. There's still suburbs there with median prices in the 400,000s. So it's attractive for first-home buyers and investors on a budget.
Yeah, absolutely. And it's interesting. Traditionally, I've been buying in Moreton Bay region for pushing maybe 8 or 9 years now, maybe more. It's been longer than that. Time flies. But I really have seen a significant turn in the nature of competition when we're buying there. So it is vast majority of cases it's owner occupiers. So, it's just, and look, in fairness, that's the nature of pretty much any area that we're buying, lately. And that is the tale of what's causing the price growth, in all these markets that we're talking about. Alex,
Franco just popped a question into the Q&A panel. Is it still possible to find properties below 500,000 in Moreton Bay? My reading of the numbers, yes, it is. They're not as prevalent as they were, but certainly there's still suburbs of median prices in the 400,000s throughout the Moreton Bay region.
There are. Yeah, look, Moreton Bay is one of those areas, like you said, it's a massive area. So it's the third largest LGA in Australia. So, you're going to get a wide variance between suburbs and so on. Our take is that realistically, to buy anything worthwhile, even though medians are kind of pulling the price points down, I think worthwhile, you're going to need more than 500 to buy something. You could get lucky and buy something for under 500. There is still deals to be had. There are still properties that are selling, transacting for under 500. But I think the type of properties that we're getting the best results with would be upwards of 500 and up, and even low to mid 500s. That's going to be a 3-bedder in some of the the better performing pockets. So realistically, the properties, just going back, I'm sorry, I'm not making anyone dizzy, but the examples, as I said, that's the kind of thing that we're looking at in that, as an entry level 4-bedder in the in the 600s. Maybe in the low 500s we can look at 3-bedders, but that's kind of the numbers that we're thinking. Again, there are exceptions to that, but generally speaking, we're getting the better buys, between the 500 and 700 mark. Okay, so just I guess some questions to ask when buying, interstate. And one of the questions we just had, someone's jumped in and said, when we're relying on listing agents to access listings, how effective can we be in negotiations? So, for the most part, if you're talking about off market, then a lot of cases it is, we do have a better negotiation. I guess hold. It allows better negotiations for the simple fact that right now, the number one challenge that we face when we're buying, and this is not just as buyers agents, but anyone as an investor, is other buyers. So it's not, because it is a seller's market, it's not the seller saying, I want X amount. It's other buyers saying, we valued a property for 615,000 and we're saying we don't want to pay any more than that. That's where we see the true market value. And some owner occupier comes in and says, I'll pay 650, I'll pay more, and it sounds, like hyperbole, but we're seeing it every day, so, and I'll touch on this a bit more, but it is very much, it can be a bit of a battle of attrition just to go through the process and get that deal at the right price. And it does take a bit of trial and error in this market. And, on that note, I should say at a very high level, we are still seeing these markets performing very, very well. And they're still very, very active. There's been some, I guess, disparity in some of the more expensive markets in Sydney and Melbourne that have kind of pulled back. But, your entry-level investments, are still, and when I say entry-level owner-occupier investments, I should say, are still, very active. They're very tough markets and competitive markets due to a lack of listings. So I guess just at a general level, why would you consider buying interstate? So I'm assuming that everyone that's kind of tuned in is already open to buying interstate and reads Terry's reports and so on. So it's pretty open to that fact. But just to kind of cover off on some of the reasoning behind, obviously it offers investment diversity. So, as you build, not everyone wants to do it, but, ideally if you build a property portfolio, then at some point you're going to get to having, you're wanting investment diversity and not having, all your eggs in one basket, so to speak. And the other big thing is, price point. So it offers opportunity to access properties at a cheaper price point that may not be available in your own backyard if you're living in the inner city of, Brisbane, Melbourne, Sydney, Adelaide, etc. So to look at something that's a little bit cheaper, even if that is, on the fringe or in a satellite city or regional area within your state, these same kind of concepts apply. Also, in some cases, could offer better yield, so better return to make the property more affordable, or possibly it's a growth driver that's not happening in your own backyard. I mean, Sydney was a really good example for that. But for example, I mean, Sydney was traditionally, quite expensive, and there wasn't a lot of infrastructure happening. So it offered, buying interstate offered access to markets, where there were opportunities and growth drivers that we didn't have in our own backyard. So the person was asking about off-market listings, is asking, why would a buyer sell off-market when it is a seller's market? And that's a really good question. So bit of a story. So I helped my dad sell his place in the west of Sydney late last year. And I was kind of brokering the deal with the selling agent contact I know. And the selling agent was saying to me, would you guys consider selling off market? And I said, no chance. We're spreading it to auction all the way. We want to give that exposure to the open market. But I guess the difference when selling off market is quite often, it could be a case of people, and it is a rarity, don't get me wrong, buying off market is very much a rarity when it's a seller's market. But it could be that people need a quick sale. It could be that people don't want, particularly with COVID, people didn't want, 50, 100 people traipsing through their homes. If it was owner occupier, it could be mitigating circumstances such as divorce. It could be that, we as a buyer's agent have not necessarily a high offer, but a good, buyer that is pre-qualified, ready to go, and is not going to be, muck around. So I guess I will say that when we look at properties, it's a bit of a running joke in the office. If we get an off-market deal when it is a seller's market, the first question we ask is what's wrong with it? And then, once we get past that, assuming there isn't anything wrong with it, then, we often find out that it can be a great opportunity, but it's not always the case. So I guess one of the questions is, and this is what I was getting at before, is, how do we pick the right area to buy when everything half decent seems like it's skyrocketed? And I guess this is what I was getting at before, when you're looking at okay, we've seen these significant prices, these based on the examples, where to from here? And the best advice that I can give is to focus on the value proposition of the area. So don't, look at the long game, not looking in the rear vision mirror, not looking at what's happened. I mean, what's happened over the last 18 months with those examples. I mean, some of them, to be frank, we've kind of moved on from as areas because we feel that we've reached a boiling point with a value proposition. But in saying that, I wouldn't discount all areas for that reason. And I would also, within the area, I would look at the individual opportunity as well, because there are going to be examples that we look at where they might have, ticked the boxes, but you can just see straight away that the value proposition isn't there because you've got 3 or 4 or 5 owner occupiers that are circling it, willing to pay a premium. But with patience and persistence, you will find those opportunities. You've just got to know where to look, and you've just got to know how to be prepped to make those opportunities come to you. When I say come to you, it's all relative, right? Because you're going to have to do a lot of phone calls and pavement pounding to get the deals, get access to the deals. But what I mean is be prepped. So when the deal arrives, you're ready to strike and you can move quickly. Do you have any kind of take or any thoughts, Terry, on how to approach the market, given that it has boomed in a lot of cases?
Some places have boomed for longer, Alex. That's one of the key factors. And what we're always looking for, what we do at Hotspotting, is to find the areas that are early in the cycle. Because we've talked about the Sunshine Coast, it's been a growth market for at least 3 years. Locations like, certainly Hobart and regional Tasmania, they've been growth markets for 5 years. Geelong, Ballarat, they've had strong price growth for 3 or 4 years. So those markets they predated the national property boom with their growth, and they've continued on during the national property boom. So we're looking for those locations that haven't done that yet. They're actually just maybe 1 year into their growth cycle. And there's plenty of those places around Australia. I know media is very, very keen to call the end of the property boom, but many locations have been on a growth path for just 1 year, and that there's still more growth to come. And there are some locations which haven't yet had the level of growth we're seeing elsewhere. So there's plenty of opportunity. Ideally, people might have wished they bought a year ago or 2 years ago, but there's still plenty of opportunities to buy in locations with good credentials for growth that are relatively early in their growth cycle.
Absolutely. And I still think that obviously with overseas migration we're yet to feel the full impact of that. The big story of what's happening within the building industry as well. So the impact that that's going to have on, established house prices. So, I guess the other thing is that, right on cue, we're getting the media saying that, like you touched on, that, that's the end of the boom. And we're seeing prices plummet in Sydney by 0.01%. So, it's, I guess, we're seeing a different tale, in certain pockets. So that's not that's not happening across the board.
And it's worth pointing out also that right now there are sections of the media declaring the end of the boom. This is the 5th time that media has had a major bout of declaring the end of this boom. The first time was 12 months ago when they declared, based on 1 month's statistics from CoreLogic, that the boom was over. Then again, about April, May, when there was another month where the figures were slightly lower than the previous month, they declared the end of the boom. And here we are 12 months later, we're getting the same again. It's just headline generation stuff, and it doesn't really bear any relation to the reality that's happening out there in markets around Australia.
It doesn't, but in fairness, when I hear that kind of thing, I pretty much welcome it, to be frank. I mean, anything that can deter buyers in the shorter term and create better opportunities, buying conditions for investor clients, is appealing. It's attractive. Obviously, as I mentioned, we're competing against owner occupiers, and people need homes to live. So, whether it's the right time to buy, it's going to have an impact from a herd mentality standpoint. But in saying that, if you need somewhere to live and you want to upgrade your lifestyle, dictates that you need to move and so on, the media commentary, goes in one and out the other, or it should.
Yeah.
So I guess one of the questions we get asked is, okay, so I live in Sydney and I want to buy in Queensland, how do I do that? And I've got to say, I mean, obviously the short answer to that is get a professional that can help and do a lot of research. You know, and obviously as a buyer's agent, someone that's paid to buy properties on behalf of other people, I would say that. But, you know, there is a lot of, you know, skill and expertise that we bring to the table. Unfortunately, look, there is no magic bullet or shortcut to local inside knowledge. You can definitely, you know, achieve good results yourself. So I'm not saying that you can't do that, but, you know, obviously having an experienced individual, you know, working for you is going to go a long way. But, you know, my take is that, you know, you're better off taking your time and being pragmatic about it rather than rushing in. So, you know, there isn't a shortcut. That's what I mean by that. And one of the other questions, I guess this comes back to your question about Moreton Bay and the, you know, can we still buy for under 500,000? And that is, you know, am I being realistic with my budget, you know, for the market I want to buy in? And I guess this is one of my you know, answers to that is, you know, to be hesitant to rely on median prices as your yardstick. I mean, obviously, median is a really good. It is good information to have, so you're not buying an albatross. You're not buying a property that's way beyond the median. You know, so you don't want to have that outlier where, you know, the bulk of the activity is. But in a lot of cases, the types of properties that we're seeing have the best performance are just you know, above the median. So if you're looking at it and saying, well, the median house price is, you know, 450,000, well, that may translate to needing, you know, 500, 600, or maybe 550, maybe 600 exaggeration, but you might need, you know, quite a bit above that to buy the ideal property type that's going to appeal to those owner occupiers and really have the best growth, you know, for you. That's my experience. Do you have any thoughts on that, Terry?
Yeah, on medians generally, the way prices are moving at the moment, median prices can be misleading because they're out of date even as they're published. They're a couple of months behind the game anyway as they are published, but they are moving very, very quickly. So they should be used as a rough guide only. And I think there's a lot of misunderstanding about what a median is. And if a median moves, whether that means that property values are moving generally at that pace. So there's a lot of confusion around that. But yeah, I think it's wise in an area not to buy too far above what's the mainstream. Maybe a little above is just suggesting that's a good strategy to get us better quality property, but not buying those outliers that are well beyond what's the norm for the location in which you're buying.
Yeah, absolutely. And I think, I mean, mathematically, the median obviously reflects where the bulk of the buying is, but it does get dragged up and down either way based on premium properties or, you know, entry level, you know, or inferior properties as well. So I think that the median's a good gauge, but quite often, as I said, you know, it's buying. I guess I just wanted to make the distinction that I'm not saying to buy beyond where the bulk of the transactions are, because you definitely want to buy that thing that everyone is queuing up for and is in highest demand. That's really essential. But I guess the median doesn't always directly reflect that, you know, in terms of the caliber of property that's performing the best. And I guess you know, I've touched on this several times, and that is kind of understanding when you're buying, you know, who's the competition, you know, within the chosen market, and how do you use this to your advantage? And obviously the answer to that is, you know, owner occupiers. Everything that we've been buying has been, you know, suiting owner occupiers, and that is quite subjective because obviously there's different tiers of owner occupiers in each area, you know, whether it's upsizers, downsizers, you know, first home buyers, second home buyers, whatever the case may be. But it's finding that, you know, property type that suits to, you know, that owner occupier, and they are the ones that, you know, 99% of the time when we're buying a property, we're competing with, you know, even if we are buying investment properties, but we're competing with owner occupiers, you know, and they are the ones that have dragged the market up. So that's why it's quite interesting. I mean, I've read stories, you know, late last year, you know, I heard certain commentators saying that, you know, investors were back and so on. We haven't really seen so much investment activity. We see investment activity day to day in the sense that we're buying for investors and we're getting a lot of investor inquiry. But in the markets that we're buying, we're not competing with, investors like we would have kind of five or 10 years ago.
Investor activity is well below its historical norms, Alex. And typically investors are about a third of the market, but the numbers we've seen in recent years are well below that as a percentage of the market. And that's why we have such an acute shortage of rental properties in the country. Investors have been sitting on the sidelines as a cohort for the last 4 or 5 years, not buying in the usual numbers. And that's resulted in vacancy rates dropping and dropping and dropping pretty much everywhere in Australia, to the point where it's very hard for anyone to find anything to rent, which means it's actually a great time to be a landlord in Australia, because rents are rising because of that.
Absolutely, yeah. And one of the things that we're seeing from initial expectations when we're buying properties, we get a rental appraisal, and then taking that through to settlement, the actual rents that we're achieving exceed expectations. So, I've had a number of those just off the top of my head. One in Western Sydney, we were expecting 650. We ended up getting 770. Another one recently in Brisbane, I was expecting 750, ended up getting 895. So, we're really seeing, some spikes in rents. I've had a couple of other questions in the chat box about, how interest rates are going to affect, how we're seeing interest rates affect. And it's interesting. I would say that, interest rates are so low at the moment. So, when we're doing kind of cash flow projections and things like that, the cash flows look great. So, there's still quite a significant buffer that we can go through before, we're seeing a significant impact to the hip pocket. So what I think is more relevant is not so much the interest rates rising, but the assessment rates. So as interest rates rise, I'll be most interested to see how the assessment rates increase. And what I mean by that is when you go to the bank and say, well, I want to borrow to buy an investment property, and they look at your rate of affordability. So right now, the interest rate buffers are significantly higher than they were, say, 10 years ago, where, it was pretty easy for me to work with a mum and dad investor and, get them 7, 8, 9, 10 properties. But right now, that same situation, it's tougher than ever to buy properties, and it requires some patience to accumulate and knock down debt. So that's, to me, interest rates, are going to, as I said, assessment rates are more important, I think, than interest rates. Don't get me wrong, interest rates, no one wants to pay more interest, but as you touched on before, interest rate rises are going to have an impact on rents. It is still going to have a flow-on effect where people bump rents up, and it's going to put more pressure on rents as well. Do you have any thoughts on interest rates, Terry?
Yeah, just that it's hugely overrated by media as a factor. It's just endless, daily, monotonous speculation about interest rates are about to rise and when they're going to rise. The people actually keep telling us they're in no hurry to lift the official interest rates. They still think it's unlikely it will rise this year, although they say it's possible if certain scenarios happen. So, the bank economists want to keep telling us that they expect they'll rise in June or in August, but the people who make the decision are saying no to that. And that's, I think, who we should listen to. There's also the conclusion that media is coming to that if interest rates rise, prices will fall. Well, that's never actually happened in the history of Australia. An interest rate rise isn't going to cause prices to fall. In fact, it's unlikely to even slow down the rate of price growth. We need 5, 6, 7 interest rate rises in rapid succession to achieve that. And that's not going to be happening this year. And you also mentioned the buffering. There's actually 3 buffers in the system in terms of what the impact will be if and when the official interest rate does eventually rise. One is the accumulated savings during the pandemic period. There's an extra $250 billion in people's bank accounts. The second one is that the fact that most households are more than 2 years ahead on their mortgage repayments. And the third one is the buffering that banks have to apply when they assess people for a loan. So they don't assess you at 2.5% at the moment, they assess you at 5.5%. So the capacity is in the system for people to cope, generally speaking, with any future interest rate rise if and when it does happen.
Yeah, absolutely. And it's interesting, you talk about buffer rates. So when I first started doing this, doing professionally, working with investors, it was easier. It was rates were significantly higher. So I think rates at the time were climbing up to around the 9%. But it was easier then to get money than it is now with rates. I'm doing cash flow calculations for people with rates, in the 2%. So it's, there's such a disparity between the amount that you pay and the ability to get the money. It's just, it's such a contrast.
Anyway, let's keep moving.
Yep. So, I guess one of the questions we touched on this is, is the market I'm buying into as genuinely as hot as I'm led to believe? And quite often, as I said, what we're seeing, is a bit of a wait and see approach as we return back from the Christmas break, but we're still seeing that kind of activity in a lot of the markets. So I feel that there has been, as I said, in some of the premium markets, we've seen, a bit of slowdown, but it is quite piecemeal. It's happening on some properties and not others. So it is quite interesting what's happening out there. But I guess my take on that is, how do I tell? And that is, look at the days on market stat. So when you're looking at a property, you might need kind of subscription tools to determine this, or you can just set up watches on, your realestate.com or domain and watch listings. But to me, the days on market stat provides a real insight into what's happening on the ground. So when you can see, okay, well, this property came on market on a Wednesday, by Saturday, it was sold. One open home, it was sold. To me, that's pretty hot. That's been pretty standard over the last 18 months with the type of thing that we've been buying. And it is hard to convey that, to investors. They still get questions, about, can you buy things under market value and so on. And, in this market, it is a seller's market. It's making sure that we just get value for money, that type of thing. And days on market often reflects this. And I guess that ties into the next question, which will be, and I know people are thinking about this, they don't want FOMO buying. They don't want to be another statistic that's paid too much for property. And, you're going to talk to an agent, if you're buying, you're going to talk to an agent, if you can get a hold of them and say, I want to put in an offer on this property, and you can be readily told, well, there's already 10, 15, 20 offers on the table. And that sounds like, if you weren't experienced, you could be saying, well, pull the other one. That sounds a bit, a bit dramatic, but in a lot of cases it is true. And my answer to that is, as I was saying before, just determining fair market value is absolutely essential. That is key. So using those tools, and we've talked about this at a previous webinars, but I'll touch on it again, and that is that being very adept at being able to determine true market value of a property is critical. So not relying on price guessing tools, but manual. Okay, I need to work what this out, and not this is what I want to pay for it, but being realistic and saying, okay, this is what it should be worth based on comparables and going through. And that's obviously, as buyers agents, what we do. We've got a very good feel for any market that we're buying in. We can readily say, okay, it's worth this much based on comparables, what we're seeing, the configuration, the property location, et cetera, et cetera, et cetera. But that is, really important.
It's really easy for people to access the information and tell them about recent sales in an area, and give you an idea of what values are in the targeted location.
Absolutely. But I mean, I guess, I will say that it is trickier in a booming market than ever, for the simple fact that you're going to come across multiple examples of properties that, have paid too much. And I guess it's one of those things where you can say, well, if multiple people are willing to pay that price, isn't that the true market value? And I think that, there are a lot of FOMO buyers out there, and we're getting, deals at good prices, based on a variety of factors. But in other cases, half the battle is also, or half the skill is, okay, saying this one's got away from us. Let's go back to the drawing board. It was a great property, but we've got to let it go. Someone else is willing to pay too much, and knowing when to stop, is really important. And that's what I mean by have patience. So it could take, multiple cracks. It could take, 2, 3, 4, 5 goes at buying a property that ticks all the boxes, or trying to buy a property that ticks all the boxes before you land the one at the right price. And, I guess the question would be, if that's the case and you don't want to get caught up in FOMO buying and paying too much, and obviously no one wants to do that as a savvy investor. So how do I potentially stay in the running even if my offer is not the highest? And that would be, you know, and I'll come back to this with a bit more if we've got time, but, you know, aiming to be competitive, but also easy to deal with. So you've got to make the selling agent or the vendors, you know, life as easy as possible. And that's not just about paying the highest price. That is about having all your ducks in a row, having all your terms and conditions in place. So easy to deal with, okay? Because in a lot of cases, you're going to get one crack, best and final offer. So, you know, there's no second chances. It's okay, you put forward your best and final offer, in some cases on a contract, and you've got to have all your terms and conditions and have everything ready to go. So you can convey to the agent, I'm not, you know, the wheels aren't going to fall off if I put in an offer on this. Obviously, if there's deal breakers under building and pest, you know, we'll definitely have to address that. But a case of, you know, my finance is ready to go, whatever settlement conditions, you know, work in the favor of the seller. If it is an owner occupier, then, you know, whatever we can appeal, you know, to that. So thinking along those lines to make, you know, your offer appealing beyond price, because it's not all about price. I guess, you know, we've had a couple of questions that have come up, so I might go through those if that's okay. One of the questions was, with the significant growth that we've shown with some of the examples, you know, is it dangerous to buy in a, you know, quite frothy market, and how do we protect against paying more than real value? You know, and that's what I was just touching on. You know, so it's patience, and it does feel like when we're buying in these markets, it's a bit of a battle of attrition, in the sense that, you know, we'll take multiple goes to get that right property, you know, and we might find, you know, and it's a long process, because I mean, within the team, we might look at, you know, 60, 70, 80 properties before we find one that ticks all the boxes and we want to, you know, try and buy. And then, you know, it can be a bit deflating when, you know, we go to market and we try and buy it, we negotiate, and, you know, again, some owner occupier just comes in and pays us way above what it's worth, you know, and in my experience, you know, it's better to miss out on one of those and be patient, or two of those or three of those, and be patient, rather than, you know, paying too much. You know, that's, you know, never a place you want to be, because as the market will ebb and flow, you know, you don't want to be in a position where you look back and think, well, you know, I paid too much. And that is quite subjective, because obviously, given the rapid growth that we've experienced, you know, even people that have paid too much, you know, in 18 months ago would have still seen some profit. But I think that, you know, moving forward, as potentially markets start to stabilize, then, you know, it's more important than ever to get properties at a good price.
Right, need to keep moving forward, Alex, and we're getting a bit short of time.
Yep. So some of the other questions, I'll just go into that.
We could leave questions till the end of your presentation, perhaps. Yep,
sure. So one of the locations I just wanted to cover off on was Toowoomba, as an example. So Toowoomba, you know, it's an affordable area. It has had price growth, but it still represents excellent value. So it could be, you know, an option that people could look at. So located 125 clicks west of Brisbane CBD, Australia's second largest inland regional centre and Queensland largest, and, you know, massive regional powerhouse there, servicing the Surat Basin. You know, a lot of infrastructure coming in a local market, but also benefiting from the $15 billion inland rail link, and, you know, very diverse local economy. Unemployment below the national average, great buys, you know, in the 500s, so it's a very affordable market, and rental yields up to, you know, the 4.5% mark in some cases. So, you know, that's just one example where, you know, you can find excellent value for money still. It has had price growth, but, you know, it is an opportunity that we've been, you know, paying attention to. Do you have any comments on Toowoomba, Terry?
Yeah, we're a big fan of Toowoomba. It's a location that we've featured in our hotspots reports for the last couple of years, and continue to feature it, because I think it's relatively early in a growth cycle, mainly generated by very important and influential new infrastructure. The new airport has been a game changer. The inland rail link And the hub it will create next to the new airport is just creating a transport hub that most regional cities don't have. And it's just bringing new businesses to establish in Toowoomba, thereby creating jobs. One of the big new businesses that's setting up there is Boeing, who make really big aeroplanes. As most people would know, it's never manufactured outside of North America before, but it's setting up a major operation in Toowoomba because of the airport and because of the Inland Railway. And that's what's really driving this demand for Toowoomba. But I think it's got a long way to go in its growth cycle yet.
Yeah, excellent. So we agree. So I'll move on. Yeah, and one of the other points I had was a very, very low vacancy rate. So, 0.4. So very, very low, which is good. So I might go through this quite quickly and then we'll get to some questions. So some of the things to do to get in front of the buying queue. So one of the things you can look at is think laterally. So aim for the segment of the resale market with a slight twist. So something that is in an adjacent suburb that's getting harder and harder, obviously, with everyone thinking similar things as affordability starts to ripple out. Something that maybe doesn't quite suit an owner-occupier buyer, which is something with a long-term lease in place or something that needs a little bit of renovation. So if you're buying in first home buyer market, they could be maybe at the bleeding edge of affordability and don't quite have the funds or appetite for something with minor renovations. And that can help you get access to properties as well. And this comes back to the question about how do you find affordability in a market that's gone, or good buys in a market that's gone skyrocketing. So, be proactive with agents. And this comes back to what I was saying before about, a bit of a battle of attrition, which is just persistence. It's going to take several goes to get a property. And, get all your ducks in a row and know, how to buy a property in the local market. It is very different. So, the offer and acceptance process is very, very different, drastically different in each state and then within each market as well. So, it's in specific locations. So, for example, buying a property in Moreton Bay is going to be different than buying a property in, in a Brisbane, for example. So, understand how that works so you can, move appropriately. Most importantly, ignore list prices. So, irrelevant, agents are I don't want to say underquoting, but a lot of agents have been caught unawares. Obviously, underquoting does still come into play, but each different area is going to list properties in different ways. They have different techniques and different styles. But I would throw all of that out the window. That's not an indication of what true market value is. I mean, it's never is at the best of times, but we're in a rapidly moving market where it is difficult to ascertain value. That can be quite confusing, the list prices. And get your contract reviewed and ready to go so you can move quickly with negotiations without any delay. And, that's what I was getting at before, trying to play it cool or hardball, you're going to be left in the dust, in a rapidly moving market. So, let the selling agent know, you're ready to buy, you're confident, you want to proceed, you've got conviction. But at the same time, there's a difference between that and, just being the person that's going to throw money at something. So, as I said, moving forward, confidence, conviction, but knowing when to tap out at the same time. And, don't be afraid to follow up on agents. So, or as Sybil from our team says, stalk agents, because you literally could be one of, 50 to 100 groups that have, gone through a property. So, by stalk, just following up, texting, email, calling. Quite often agents can't get to all their phone calls, so texting, is pretty common these days. So, and of course, get professional representation. So, as a buyer's agent, we make everyone's life easy. And, selling agents like dealing with buyer's agents, good buyer's agents, because we have pre-qualified, buyers that are ready to go. And deals that, go through. So that's important as well. So I might not go through those. I think we're running out of time. But call to action, we offer a $500 discount off our full standard investment property buyer service if you quote the code word hotspotting after listening to this. So that's it. I might go through some of the questions if we have time. Terry, I think we've got about 5 minutes.
Yep, we can certainly go for some of there have been a number of questions inevitably asking about the impact of floods that we've seen in parts of Queensland and parts of New South Wales, including parts of Sydney just recently.
Yeah. And I would just like to say that, apologies to everyone that I didn't get more time for questions. So if you've got any questions, by all means, send me an email or feel free to give me a call as well. My phone number is listed on the Adviseable website. So I'm happy to have a chat with folks. So coming back to the flooding, one of the, this has come up a lot, obviously. It's one of the questions that people have been asking me a lot day to day. I haven't had any clients, fortunately, that have been affected by properties in the flood zone. And that is kind of ties into one of the parts of the due diligence process, the preliminary due diligence process that we follow, which is checking, flood overlays and bushfire overlays. And given that, it is it's a quote 1 in 1,000 year flood, as they're stating, which is BS, but it is above the 1 in 100 year flood levels. We're not necessarily foolproof beyond looking at 1 in 100 year flood levels, but we're still very careful about mitigating against those flood levels when we search, in addition to bushfire overlays as well. So fortunately we haven't been affected, but I guess the big effect that it's going to have, and everyone's assuming it's a negative effect, but I think that it will put further pressure on those houses that within particular pockets that are not in flood affected pockets. And like I said, people need places to live within those areas. They're not going to move out en masse because a small portion of the area was affected by flood. Obviously, I'm talking about areas such as Sunny Coast and Brisbane, notwithstanding areas like some of the northern New South Wales areas that have been heavily flooded. But I also think that one of the big takeaways, as I was talking to Terry about before this, was that it's going to have further pressures. It's going to put further pressures on the building industry, which is, really on the ropes, doing it tough at the moment. So with floods, people needing to repair and rebuild homes, it's just, it's going to be a kick in the guts, when they least needed it, and just put further pressure. And I think that that's going to, it has to impact established homes.
The cost of constructing new homes is already rising because of shortages of everything, and it's going to be even more so as a result of the impact of these floods. Rents also are going to rise even more so than they currently are because vacancy rates are very low already, and they're going to have further pressure on vacancies and rents as a result of those people who are impacted directly. But it is worth keeping in mind when people are looking at the images on TV give the impression that everywhere is underwater, that in Brisbane, I think it's my calculation is 1.7% of homes that are directly impacted by the floods in the recent weeks. So it's vast majority of properties are outside that zone that's been impacted by flooding.
Yeah, absolutely. And this kind of ties back into what I was saying before about building. With one of the questions we have here is someone was asking about, the new build investment space. And if we're kind of leaving aside new build units, because we wouldn't be touching those at the moment, given the oversupply in the capitals. But if we're talking about, your traditional house and land package, interestingly, they've performed quite well. And I gave an example of a build that we've done with a block of land for an owner-occupied builder. But your traditional investment space has done reasonably well. But the flip side to that is, as it's doing well, the builders are doing it very tough, and build prices have skyrocketed. So land prices have increased, but build prices have skyrocketed. So some of the value proposition has been a bit precarious. And I know firsthand of many, many investors that have been handed price increases by their builders. So even though it's a quote fixed price contract, there is a loophole depending on state, but in an HIA contract where you can pass on a price increase. And, and that's been, some builders unfortunately have gone bust because of this very reason, where they've just, material prices, as Terry said, have just gone through the roof and they haven't been able to complete builds. So it's a really it's an interesting time with that. That's going to put pressures on, who you choose to build with, most importantly, but on the established property market as well, how that's going to flow in and put further pressures on that.
Hey, Alex, there's a few people have asked questions about the practicalities of what you do. How do you, physically inspect properties when you're buying interstate?
Yeah, great question. So we do have associates on the ground that will inspect properties for us. So we would never buy a property without having it fully inspected under our watch. So that's part of our process. So, when we're buying properties, I'd say in the vast majority of cases, the investors that we buy them for don't actually see the properties themselves. You're welcome to, but most people are happy just to look at the numbers and the money we make them, so to speak. But it's, we would always provide videos and photos and all the due diligence checklists. So, whenever a decision is made, we've bought properties. I bought properties, for people in the same state that they're based in. I bought properties for people overseas, many, many times. So it's pretty much par for the course for us to be, buying remotely for people and following a very comprehensive process that we follow to make sure that nothing's missed.
Okay. Got a number of questions about location. Maybe I could just quickly zip through a few of those. There's a couple of questions about what we think about Bendigo as a place to buy. I'm certainly been a fan of Bendigo. Good place. A little bit later in the cycle than Ballarat and Geelong, which have been growth markets for, say, 4 years. Bendigo got started a little bit later. It's probably halfway through its cycle now. But I think a very good place to consider with great long-term prospects. Would you agree, Alex?
Yeah, I think we love Bendigo. So Bendigo is great. So we've followed those markets, followed from Melbourne to Geelong to Ballarat to Bendigo. Bendigo got pretty hot there for a while based on lack of stock. So listing numbers were way down. We're starting to kind of creep back into Bendigo over the last few weeks. Funnily, you should mention it. But yeah, definitely supportive of the big picture and long-term play of Bendigo.
There was a question about Dubbo. Dubbo is one of those very, very solid regional centres in New South Wales that I've always been a bit of a fan on. Do you ever do any buying in Dubbo?
We haven't done much work in Dubbo, but I guess we can't be everywhere at all at once. But I mean, definitely not against Dubbo. It's just I can't say it's a market that we've been too active in, to be frank.
Yeah. Some of the Queensland markets, there's a question from Daniel about the Fraser Coast, Hervey Bay, certainly a market that's kind of had an enormous uplift in the last year or so from that exodus to affordable lifestyle trend. And another one Daniel asked about is Yeppoon near Rockhampton, which has become very, very popular with lifestyle buyers as well.
Yeah, look, we traditionally haven't, gone too heavy into areas that, as on the smaller side, or I guess have, a larger tourism base or that type of thing. So we tend to stick towards the major regional hubs and capitals. That's kind of our take.
Yeah. Okay. So if there's any other areas. There was some questions along the theme of responding to our earlier comments of trying to find those areas that are a little bit earlier in the cycle. How do you actually find those areas? How do you know that a market's early in the cycle rather than very full in the cycle? Do you have any thoughts on that, Alex?
Yeah, look, it's not an easy one to gauge for the simple fact that, it's not necessarily a case of, each property is going to boom for a static amount of time. Every area operates, on different time frames and does different things. And, you could even argue that, in some cases like Brisbane, for example, has been, so suppressed price-wise for so long that it's now just playing catch-up. So, I guess it is how you look at it in terms of whether it is booming or it's just playing catch-up. But my take is just really looking at the value proposition of, what are the prices and what are the drivers within that market that could lead to further growth, and how it's going to perform longer term. But I guess also looking at the buying conditions. So, as I said, we can look at the big picture macro drivers of an area, which are great, but also looking at, okay, on the coalface, when we're looking at listings and market activity, how is that playing out? Days on market, when we're looking at properties, are we still getting opportunities where there's good buying based on value proposition, as I said, based on our determined market value. And that it's a bit of a hard thing to convey, because it can be a bit, leaning on a number of years of buying experience to kind of quantify that. But I guess it's watching the market, and I would rather, as I was saying, be a bit patient and miss out on a little opportunity, but buy for the right reasons, than rush in to a market and buy for the wrong reasons, is my take.
And you can always look at the numbers. There are websites where you can go and look at what the current median price is in the area, how much it's grown in the past 12 months, how much it's grown in the last 3 years, and the last 5 years. And there are some markets where, like Byron Bay is a standout example, where in the last 3 years, its median price has grown about 60%. So definitely that's a market that's very full in its cycle.
Yeah,
as opposed to somewhere where the numbers for the last 3 years are much lower.
But also understanding who's buying those properties, I think, is really important as well. So Byron Bay is a really good example. Byron Bay, central coast of New South Wales. So talking to agents there, it's obviously people that are migrating, that are coming from a property base that has much greater affordability, not affordability, but price points. So you talk about buyers out of Central Coast and Byron Bay that are coming from Sydney, where everything looks cheaper if they're buying down. So that's dragging prices up. So, to me, that's creating a bit of artificial growth in a sense. It is dragging prices up, but is it sustainable? It remains to be seen. So I think that, ascertaining who's actually driving the price growth is a really important question to ask as well.
All right. Okay, well, Alex, I think we should probably wrap up. We're going a little bit over the hour, but there are a lot of questions, and I would urge anyone who has further questions or didn't get the answer that you're looking for to your question today to follow up with Alex. The email address is on the screen that you hopefully can see. Also the website. If you also go to the website, you'll find a contact number where you can call Alex and have a chat about what you're interested in. And also urge you to be aware of the discount offer that's for people who are watching and listening in the webinar today. So thanks, Alex, for a very informative and helpful presentation to help people sort of find their way through the gnarly bits of the market at the moment. It's not easy for anybody. And I think it's a great argument for having a really good, experienced buyer's agent on your team now more than ever, I think, in the current climate.
Yeah, absolutely. And it is an interesting market, and I'm really looking forward to seeing how it shakes up over the next kind of 12 months or so, because it has been very interesting times, obviously for everyone for a variety of reasons, not just property related, but I'm keen to see how 2022 shakes up.
Okay. Well, thanks again, Alex, and thanks everyone for your participation today. And please, I do urge you to follow up and make contact with Alex and other members of the team at Adviseable if you've got interest in property investment or you've got further questions. Let's do it again soon.
Thank you. Bye.
Bye for now.